Perfect. Okay, guys, how are you? Welcome to your revision session for the credit risk. Hope you're all feeling positive, focused, ready to go. I sent you the mock paper. I know it was a little bit later now than I had anticipated, but for the purpose of this, I'll go through it with you. I'll have the solutions here on screen, and I'll go through everything with you. Is that okay?
Okay.
You're happy with that? Okay. So, firstly, just to let you know, like there's no surprises with the exam. I'll actually share my screen now. Uh,
Sorry, Angelina. I think
Yeah, no
I
problem.
need to make you a co-host, don't I?
You do, yeah, yeah.
In order for you to be able to share your screen. Does that work?
I didn't get any notification there now. Let's have a look. Ah, there we go.
Okay, so now you can hit the green and share your screen.
Yeah,
Well
perfect.
done. Well done.
Great. So, can everybody see that clearly?
Yeah.
Yeah. Okay. So, you have a total of 8 questions for the exam. So, your question one, question two, as I mentioned, are your compulsory questions. So question one is preparing a set of accounts, and question two is calculating your ratios. So like they were the question that was in your assignment, so there's nothing out of the ordinary. There's the 6 other choice questions that you'll have. I don't know whether you had a quick look maybe this morning. I'm not. 6 is your scoring module. 7 is your model again, calculating the risk for companies. And then question 8 is your multiple choice questions. Is that okay? So as Declan mentioned, so for question one, set aside your 40 minutes, and question two, and I wouldn't spend any longer on either of them, because I know with question one particularly, if you start with that, time can definitely run away with you. Okay, so yeah, I'll start off with question one. So as you can see, you're provided with the trial balance here, and you're asked to prepare your schedule of adjustments, your trading profit and loss account, which is your income statement, and then your balance sheet, which is your statement of financial position. Okay, so I just, for the purpose of this, I put the notes over to the right for you. So I would start working on obviously the notes first. So your depreciation is to be provided on motor vehicles at cost. So your motor vehicles at cost is 43,000 and a half multiplied by 20%, and that'll give you 8,700. The depreciation to be provided on your fixtures and fittings at cost. So your fixtures and fittings is 132. So you multiply that by 10%, and that'll give you 13,200. The interest payable on the loan for the last quarter is 5,270, so we don't have to worry about that just for the moment. The insurance includes a new policy costing 8,000 per annum, and which is paid for 12 months in advance on the 1st of July. So just to be careful to, I know this sounds basic, but just to read the notes properly, because you see there that that's actually for the last 6 months of the year. So if it costs 8,000 for the latter part of the year, that's actually going to be 4,000, not the 8,000. Is that okay? Makes sense. And
Yeah.
then finally, your provision for your bad debts is to be adjusted to 1.5% of your debtors. So your debtors are 475,134 multiplied by your 1.5%, and that's 7,127. Okay. So is everybody with me so far?
Yeah.
Hopefully. Yeah, great. Okay. So the solutions that I have here, like this would be if you're looking for your top marks in terms of your layout. So the schedule of adjustments, you have your cumulative depreciation on your motor vehicles is your 26,100. Okay. So that's the depreciation charge for the period. It's not your motor vehicles at cost. Okay. So 26,100 is adjusted by your 8,700, and that'll give you 34,800. Your depreciation charge for the period on your office equipment is 26, and that's to be adjusted by the 13,200, and that'll give you 39,600. And then underneath that, I would put the depreciation charge for that period, which is your total value, the 21,900. That's your 8,700 plus your 13,200. And I put it on that line there. Okay. Then your loan interest paid, we have to include that. So the loan interest paid is 15,800. That is to be adjusted by the 5,270, and that'll give you 21,070. And that's part of your accruals account. So I put that underneath there for the 5,270 on your credit side. Then your rent rates and insurance are 21.5. Okay, so you have them here. They're your operation costs. The insurance was paid in advance, but obviously, as I said, from the 1st of July, the latter part of the year. So you're just adjusting it by the 4,000. So you'd be taking it away because it's been prepaid, and your adjusted balance would be 17.5. And then under that, I would put the total for your prepayments account, which is the 4,000. And then finally, the last part of the notes that you need to deal with is your provision for your bad debts. So the provision is 5,500, and you'll see you have your provision for your bad debts is here. Okay. So it asks you to, the provision for the bad debts is to be adjusted to the 1.5%. So you know your adjustment is going to be the 7,127. So if you take one from the other, your adjustment is going to be the 1,627. Is that okay? And then when you total both sides, your debit and your credit side, they total the 32,797. Okay. Does that make sense to everybody so far? Yeah.
Thanks. Yeah.
Just even if you do, yeah, a little thumbs up so I know I haven't completely lost you. Yeah. Okay.
Yeah, okay.
So like that with the notes, there's nothing out of the ordinary there, is there?
No.
No. And there's no trick questions or anything. Okay, perfect. So then the next part we will go on to is your trading profit and loss. So again, just make sure that you include your heading. So it's Jack Jones Limited trading profit and loss for year ended 31st of December 2023. Okay, so I know for myself when I was doing the exam, I know it's open book, but what I used to do is I just used to have like a little flashcard. So just to jog my memory that I didn't have to be written at notes, just that I know, okay, what's the first thing that the profit and loss will always start with? It's always going to start with sales. And just have a layout that you know you have your sales, less your costs, and that'll give you your profit will be down the end. And then say for your balance sheet, okay, my balance sheet is always going to start with my fixed assets. I think if you kind of get into the habit of that, you won't have to be, the layout will come and you won't have to be worrying about maybe rooting in your notes, or as I said, have a little flashcard with just the format. Because that's what we're looking for, is that you know what the format is, and then obviously where you slot in the different amounts from your adjustments and from the trial balance. Is that okay? That's just a little tip that I think might be useful for you. Okay.
Yeah.
Because it's very easy to get bogged down if you have notes beside you. I think you won't really have time. And this is, guys, this is the question that you can get your full marks in, no problem. Okay, so I'd be confident in just getting that boxed off, and you don't have to worry about it. Okay, Perfect. So we start with the profit and loss. So our first figure is going to be our sales, which is the 2,375,600. Okay. And then we've less our cost of sales. So the cost of sales is your opening stock plus your purchases, less any closing stock. And your closing stock is in your notes there as well. Okay. And that'll give you your total cost of sales. And you'll subtract your cost of sales from your sales, and that'll give you your gross profit. So that's the first part of the profit and loss. Then you need to subtract your operating costs. So these items are going to be like, that's your expenses. So you have your wages and salaries, 356,340, your admin expenses, your distribution costs. Now, here is just the important thing to remember for your adjustments that you're putting in the adjusted balance. Is that okay? So for your insurance, it's going to be 17.5. Your depreciation charge, that's the total, the 21.9. Now, if you want to include them separately, that's absolutely no problem. And then you'll be including your increase in your bad debt provision. So that's the 1,627. So just always remember that it's your adjusted balance that you're putting in the profit and loss account. Okay. And then you total your operating costs. That'll give you a total of the 525,477. You'll subtract that from your gross profit, and that'll give you your operating profit, okay, which is 191,276. So you're subtracting this figure from this figure to give you this figure. And then you need to subtract any interest or tax. So the interest paid is the 21,000 on the loan interest paid, okay? So that's your adjusted balance there again of 21,070. And you subtract that from your operating profit. That'll provide you with your net profit. And it's before tax, your NPBT. Is that okay? So that is literally your trading profit and loss. So that's the second part of question 1. You happy with that so far?
Yeah.
Yeah, great. Okay, lovely. And then finally, we're going to go into our balance sheet. So again, obviously, just clearly show your heading. So you have your Jack Jones Limited balance sheet as at 31st of December. Just actually thought of something, you know, when you're doing the exam, whatever's easiest for you, if you want to just add a little tab beside each question that you're answering, just put Q1 answers or whatever. I think that would be much easier, save you time. If that's how you want to do it, is that okay?
Yeah.
Just make sure that it's clear and that you're not making things more complicated for yourselves. Okay. Perfect. So we have the start of the balance sheet, which is your fixed assets. Okay. So your buildings or your premises, we didn't have to do any adjustments with them. So it was 430,000. So our motor vehicles at cost were 43.5, less the depreciation charge for the period, which is the 34 from the 43.5. That provides us with the 87. Our fixtures and fittings, again, what we bought them at, less the depreciation charge for the period, subtract one from the other, and that gives us the 92,400. And when we total all of those together, we would get the 531,100. Okay, so that's the first part there, your fixed assets, boxed off. Then we need to look at our current assets. So what's included in that is our stock. That was your closing stock. The debtors. So just remember that the debtors needed to be adjusted. Okay, so it'll be it was the 47. Sorry, now I know maybe jumping up and down from the screen isn't very helpful, but take the amount, the 47. Sorry, start again. 475,134 less the adjustment of 7,127 will give you the 468,007. I always found that I used to forget this. So just remember, maybe, you know, a little reminder for yourselves to make sure that you adjust the debtors. Is that okay? And then we will put in our bank as part of our asset, and the prepayments, the insurance policy is the 4,000. So this is the layout that I would use. I think it's quite clear. So you'll total your current assets, and they are 630,359. Okay, so you can have them in this column here. And then less any current liabilities. So your liabilities are going to be your creditors. There was no bank overdraft. At this part here for the current liabilities, so you'll deal with the mortgage just for 1 year. So that said, it'll be 30,100. Your accruals account, which is the loan interest paid, right, is the 5,270. And then the tax payable, 84,075. So your tax payable was here. Okay, tends to be down the end of the trial balance. So tax payable 84. So when you total your current liabilities, you'll subtract the liabilities from your assets, 449,653, from your 630,359, and you will get 180,706. Okay. And then your net current assets plus your fixed assets will provide you with this. Say this is how I would do it now myself. Just do a little calculation at the side. Sorry, I've lost my train of thought there. Subtract from the other, yeah, grand. So you add the two of them together, okay? And then you'll be taking your long-term liability away, which is the remainder period of the mortgage is the 9 years, okay? So that's 270,900. You'll subtract that from your assets, and that'll give you your total net worth then for the company, which is 440,906. Okay, and then the last three parts that you're financed by, so that's going to be your capital, which is your 2,000, your retained profits, and then your net profit from this period, which is what you would have had in your profit and loss. So just make sure that they're the three parts that you include. And once you total them, that'll be your net worth. So this, your net worth, they'll balance there together. Is that okay?
Yeah.
So looks very easy.
Wouldn't say easy, but yeah.
No, I said it looks very easy. Of course, as soon as you take, Declan said, if you take anything away and you just start from scratch, practice. Did you guys received? I sent you sample trial balances.
No.
Yes. Going
Yeah,
back, I think.
yeah.
Did I can't hear you, Ava. Did you? I don't know if you said something. I was sure I sent. Okay, not to worry. So, yeah, I have a set of sample trial balance with the solutions for you to practice. So just get you used to working on the notes, doing the adjustments, the practicing the profit and loss and the balance sheet. Is that okay?
Mm-hmm. Can you hear me now?
Yeah, I can, Ava. Yeah.
Oh, okay, good.
Perfect. So that's question one. Done. Boxed off.
Okay.
Okay. Lovely. Just for the purpose of the solutions, I included the adjusted trial balance, but you will absolutely not have time to be doing any adjusted trial balance in your exam. Okay. It's just for your own knowledge. Okay, so question two is your ratios. Okay. So you'll be provided with the balance sheet for a company for 3 different years. Okay. So what I'll ask you, there's 3 parts to this. So again, this is reflected in your assignment too. It's pretty much the same. So it says you're required to calculate any 6 ratios of your choice for each of the 3 years. So when you calculate that, you're actually going to have a total of 18 ratios. Okay. And just remember, the ratios are included in the exam for you. So you don't need to be remembering anything. Okay. And I know I did have one or two queries whereby when you were calculating the ratios, I think it was for the creditor or debtor period, the days was maybe on the first line as opposed to on first line and one part to the second line. If you calculate it either way, you're still going to get the same answer. Does that make sense?
Yeah.
Yeah. So, as I said, yeah, the ratios are going to be included for you. Okay, and then you're required, so each of the ratios should be, sorry, you'll select them from one of the categories. So it'll be your profitability, okay, your liquidity, and then the management efficiency ratios. So what I would recommend there is do 2 from each, okay? And then write a short comment, and a short comment would mean two sentences, just to show your understanding of what they mean. And then finally, based on the ratios that you've chosen, state if you'd consider the company to be a low, medium, or high risk, and whether you would extend a credit line of 50K. Okay.
Mhm.
So that's it. That's your 3 parts. So you literally start working on calculating your ratios first. Choose whatever ratios you want from each of the categories. Write your short comment. Is it low, medium, or high risk company? And would you extend the credit? Okay. So, in terms of the profitability ratios, so I'm just, you can all see the screen clearly, can you? Do you want me
Yeah.
to enlarge it or anything, or it's okay, is it?
Oh no, it's okay.
Perfect. Okay, lovely. So for the profitability, you would go with your gross margin, and your operating profit. Okay. So I'm not actually going to physically have each of the do everything. I just have the calculations here for the ratios. Is that okay? Well, I've actually them all calculated there in the solutions. Obviously you won't be required, so I've highlighted there's the 2 there, of the 2 for the ratios, and then the stock turnover. I would include your debtor and creditor period. They would be the main 2 under your management efficiency ratios. Okay. So for the gross margin, you can see that it has increased from 25% to 26%. So it's increased each year, which would be very good. So just for the purpose of the exam, this is how I'd lay it out as well, guys. Just keep it very clear under your profitability ratios, selected your gross margin and your operating profit, and then just put your little bit of an explanation underneath. Okay. So again, gross margin has increased year on year. Say that's a very good achievement, particularly when there's no loss of volume for sales. And then again, we see that our operating profit has increased significantly in the latest year. So we could say that's a good control over the running of costs, and staff numbers have been reduced without any negative impact on sales. So I know actually something to remember, Declan has given a good tip. So like the things that we like, so like sales, profit, all of that, we want them to be the higher number. And then the things that we maybe don't particularly like, say your stock turnover, we want them to be a lower figure. Is that okay?
Mm-hmm.
That's how I kind of remember. So you always, if you see, okay, your gross margin is way like this figure for here or whatever, vice versa, you kind of go, well, we're not doing too well. Okay. So basically that's the first part, your profitability ratios. They would be the 2 that I would choose. You show your calculation there and your comment. Then the liquidity ratios, choose your current and then your liquid ratio or your asset test. So again, we see that the ratio has improved over the 3-year period, and it is at its highest in the latest year. This will show the company is in a good position to, say, finance further expansion in sales activities. And like with a healthy current ratio, you'd say it indicates that the company is financially healthy and it has all of their debts well covered. Okay. And then again, for the liquid ratio or the asset test, it's also called, again, we can see that has improved each year, despite significant investment in fixed assets, which will have impacted on cash flow and available funds. And this is primarily due to major improvement in your creditors. Okay. And then finally, your management efficiency ratios. I've included the stock turnover there, but I'd include your debtor and your creditor period. Okay. So you'll see for each of the ratios, they're showing significant improvements. Okay. So obviously the debtor collection period has reduced. Your creditor payment period has reduced. So they've gone out to a high level in year 2, but in the latest year, there's a negative trend for each of these, indicating that there's a good effort by management to bring these ratios in line with acceptable levels. Okay. That's more detailed information that I've put there. So then finally, as part of C, I would just say all of the ratios in the latest year indicate that this company can afford to take on further debt beyond the credit line. Therefore, the company would be considered a low risk for this amount. Okay. So that is question 2. Happier? Does it make sense?
Oh yeah, it does, yeah.
Yeah. And I think just, to keep it clear in your mind of what's required. Jack, I don't know, is there anything that you might want to contribute there for me?
Yeah, I think there's a couple of things just that I was
Perfect, yeah.
thinking as you were going through. Number one, and I'm good at stating the blindingly obvious. Read the question. I'm sorry to get down to this level. So at
Yeah.
each stage, we will ask you clearly what we want to get. So just make sure that if there is 3 parts to a question, so question 1 says we want the schedule of adjustments, we want the P&L account, and we want the balance sheet. Make sure that you answer all 3 parts. Same in question 2, read exactly what is required. So rather than assuming, oh, I must do this, read the question carefully, make sure you know and understand what is being required, and then give us what we're looking for, because we're going to give you marks based on what we are looking for. So that is number 1. And the other thing that sometimes causes people trouble, and again, I genuinely can't remember on the exam paper, there is one number that can cause people some grief on the trial balance, and that is the bank figure.
Yeah.
So
Thanks for that.
the bank figure, so you will see you've gone back there. Yeah, see the bank. No, you've gone.
Sorry, on section 8.
Yeah. If you just go to, that's fine. Just leave it there. So there's your trial balance. The last figure is your bank. Okay. Now the bank figure can either be a debit or a credit. So you can either have money in the bank or you can be overdrawn. So it's the only one figure in your trial balance that can appear on either side. So how do you know? Now, without getting into debits and credits and all that sort of nonsense, how I would have do it is, and how I've always done it is, I will find out where the bank is on the trial balance, and then look up and say, is the bank on the same side as the debtors, i.e. it's an asset and something that I own, or is the bank on the same side as the creditors? In other words, this is money that I owe. Is that okay? So without confusing yourselves with debits and credits, have a look at the bank and see which side of the trial balance is it on. If it's the same as the debtors, it's an asset, it's money you have in the bank. If it's on the same side as the creditors, it's an overdraft, it's money you owe the bank. And that can be a cause sometimes of the balance sheet not balancing, because if it's an overdraft and you put it in as an asset, obviously your balance sheet isn't going to balance. So just to make you aware of that as well, so just to be awake and know what you have to do. Is that okay? And maybe if I can give you some hints now, I don't think you covered it because I had a call there earlier. If you get to the bottom of your balance sheet and your balance sheet doesn't balance, yeah. Now I told you not to spend hours doing it, within the 40 minutes, and not only within the 40 minutes, if you stop after your 40 minutes and you do it and it doesn't balance, you go on to question 2, then you do your other 2 questions. And at that stage, then, if you have 10 minutes or 15 minutes left over, then by all means go back and see, because there is a perfectionist lurking somewhere inside you that would just like to have it all balanced. So if you have a few minutes at the end, go back and see if you can do it. 3 ways I would recommend that you balance the balance sheet if it doesn't balance. Number 1 is just, when you have your balance sheet total and then you have financed by total, just subtract one number from the other and see what is the difference. Yeah. And then check back through your balance sheet and your schedule adjustments to see, did you miss something? Yeah. And then you go, oh, look, I'm 2,000 out. I left capital out. That was stupid. And then you just put in your capital and you do it. Yeah. So that's number 1. So that's a simple thing. You left a number out. So once you subtract one from the other, that will give you the figure. And if that works, well and good. If it doesn't, what I would do is I would divide the difference by 2. So if I am 11,000 out and there's no 11,000 on the balance sheet, dividing it by 2 gives me 5,500. And then I look back through the trial balance and say, look, provision for bad debts. I added the provision to my debtors. I should have subtracted it. Are you with me? So if you add a number you should have subtracted, or vice versa, then your difference will be double the number you're looking for. So that is number 2. And then number 3 is, if you get, and this hopefully will help you in reconciling even customer accounts and remittances and all that kind of stuff. If the answer is something that's clearly divisible by 9, so say, for example, your difference is 180, yeah, or 270, or 900, right? If you look at the difference and it's clearly divisible by 900, what that means is you have transposed a number. So you have put in, 6,000. The number was 6,500 and you put it in as 5,600. So if you transpose a number, your difference will always be divisible by 9. So if you put in 45 instead of 54, it's 9. If you put 32 instead of 23, it's 9. If you put 64 instead of 46, it's 18. It'll always be divisible by 9. So if you ever see a difference in your reconciliation that can be divided by 9, now I know I've messed up a number, I've transposed a number somewhere, and then you just go and find it. Yeah. So there are 3 tricks that I have used in the past to find. And then if that fails and you have time, then literally it's with go down line by line through the thing and check off each number. And maybe if you tick off all the numbers on your trial balance and on your adjustments,
I forgot to say that actually.
Time, and it may or may not be available.
Yeah.
Yeah.
If you do have time to kind of tick off things as you're going along that you have actually
or you
dealt
just highlight
with them.
the cells
Exactly.
as you do them. So again, it'll sort of scream out at you if you've missed something. And then I suppose the other thing for the balance sheet is to remember to use the adjusted figure and not the figure that's in the trial balance. So what we want to do is to see, did we make a profit or a loss in the period? And in order to ascertain that, then we have to take the adjusted figures. So once you do all that and get the format right, I think that's really what we're looking for, to get the format right, that you are so familiar with a set of accounts that in the real world, when somebody drops a set of accounts on your desk and say, are they good for 30 grand? You'll be able to make some sense of it and make an educated guess. Are you going to get the guess right 100% of the time? Of course you're not. 99 is usually good enough. Yeah, and hopefully that by applying the ratios and the knowledge that you've gained here over the last few months, you'll be able to see things in a set of accounts that will just help you to make better decisions. So that's the whole point of this module. Okay, that's everything I have to say for now. So Angelina, sorry, you
Yeah, so we
just in
we
terms
went
of the
through
other
question
questions,
one.
then I'll let you keep
Question,
going because
question one,
we
question
plenty of time. It's only 11 o'clock, so
loads. Yeah,
take away.
yeah. So I suppose actually everybody's happy with that so far, are they? Yeah,
And those two questions get you 100 out of 140.
yeah.
You know, so that's that. And then if you can get those fairly right, when you add your short test results and your assignment results, like, come on, this is very doable. This is very doable. Yeah. Don't panic. Okay.
And I always
Back
remember,
to you,
Declan,
Anthony.
you just say, yeah, and actually that's one thing not to panic. I always remember when we were doing the exams, like it is an opportunity to actually showcase what you know. And I think once you
Brilliant, yeah.
start thinking like that, you go, actually, yeah, God, I do know an awful lot, as opposed to going, oh my God, I can't remember this, I can't remember that. So just that you do know your stuff, showcase it, let us give you 100%, and we do our best as close to. Is that okay?
Mm.
That's always
And
stuck with me from my
80% is the same as
studies. Yeah,
100% in terms of you still get a distinction.
yeah.
You know, there's no distinction between 82 and 99. So anyway, that's that. Okay,
Perfect.
back to you, Angelina, for the other questions.
Lovely. Yeah. Okay. So just let's say question one, question two there. Perfect. And then the next one that I would focus on will be the bad debt provision. Okay. So again, that was your question two, say in your assignment. So this is an easy one. So what again, if you just read the question, as Declan said, so it says prepare a schedule of recoverable and unrecoverable debt based on probability. Then suggest an amount which should be provided as your specific provision for probable debt or your general provision for your doubtful debt, and then briefly explain your recommendations. So briefly being 1 or 2 lines. Okay, so that would be a question that I would recommend. How do you feel about that question, guys?
It's doable, I think.
Yeah.
Yeah, it's
And in
okay.
terms of calculating the recoverable debt, so you'll have your total ledger that's here. For your recoverable, it'll be 100%, then it'll be 95%, 90% would be 77,965, 75, and you go across, so that's your total coverable there. Okay. You happy with that so far?
Yeah.
And then for your unrecoverable, so you literally just right here, your recoverable, unrecoverable, and that's pretty much the first part that you're required to do. And then your total recoverable is you're subtracting that figure from that figure, your recoverable from your ledger. Okay. And then the specific provision that you might recommend, I'll just have a look now to double check that there. That's your specific provision, which is the 8524. General provision, which is the 16249. Okay. Just want to make sure that I have this right. Yeah, so you provide your specific provision. I know this ledger now actually has the VAT included. So you could suggest 8,524, your general 16,429, and then for your brief comment, it's usually 150 plus days is unlikely to be paid, can be specifically identified, and the balance of unrecoverable debt is based on probabilities. So that would be your brief comment that you provide. Is that okay? Yeah. Okay, perfect. So that's your
Can I have
second
a
choice.
just
Yeah.
quick question?
Yeah.
The cell E26, why it's empty?
E26 for the overdue, is it?
Mm-hmm. 30 days, it's already overdue. Everything above current.
That is a good question. Leave that with me. I'll, so when I was doing my calculations. Yeah, I'll double check that actually with Declan as well. Martin, will you leave that with me? Is that okay?
Not a problem.
Perfect. So, but really, for the purpose of the exam, you're just literally required to do your recoverable, the recoverable and unrecoverable, okay? And then B, your specific general provision, and then C, it's a brief explanation, okay? And leave that with me. I'll double check that actually with Declan if that's okay. But just for the purpose of the exam, it's, yeah, that's what you're required to answer. Okay. I'll check. Okay. And then for question 6, it's your overall your scoring module. Okay. So second now. So you're provided with so you're reviewing 3 debtor accounts and you've analysed their end of year accounts. Use the credit scoring module attached to answer the following questions. So assign a score to each company based on the key ratios. So the key ratios will actually be given to you in the exam. Then you assign a score to each company. Identify the company that it is whether it's the highest risk, and state which ratio, if improved, would result in a better risk score for this company in the shortest time. Okay. So that would be another question that I would choose. So obviously based on the scoring module you're provided, I've entered the details here. These would be blank based on the information that you're provided. You'll say whether it's you've 3 years, if it's from 0 to 3, you'll total it up, your scores. Your score range is calculated from 0 to 24. And then you say whether low risk is 0 to 7, average risk is 8 to 15, and then highest risk. And then you list the company based, so A, B, C. 19 is a high risk, company B, C will be classed as a low risk. Okay. And then for part B, company A can improve their score by making the following changes. You could say that if they reduce their debtor collection period by 6 days, maybe their stock, look at the liquidity, they could look at increasing it by 2%, and that would be answering question B. Is that okay?
Yep.
Okay. Grant. Then question 7 was part of your second assignment. So in the assignment, you were given 5 companies. For the purpose of the exam, you're only going to be given 3, okay? So you're required to assign credit lines to each up to a maximum exposure of 100K in total for all 3. Your company is willing to trade any high-risk customers, provided they are profitable. Use the key performance indicators below to complete a scoring table for each 3 companies and state A, the order of risk, and B, the credit line you'd recommend. Okay, so your first job is to complete the scoring table. Okay, so you'll obviously, depending on each of the percentages or details here, you provide them with your number and total it up. And then based on that, you'll say if it's a high risk, medium risk, or low risk. Okay. Based on the risks, then I know in terms of giving the credit of the line of credit. So if somebody is a low risk, this is guidelines, I think, that DEC has provided. So if they're a low risk, that should say you'd extend 25% credit. If they were a medium risk, it would be 15%. And if they're a high risk, then obviously you may or may not extend credit to them of 5%. Is that okay? and then assign any appropriate credit line to each and state what your recommendation is. Okay. So that's for
Yeah.
question C. Declan, I don't know if you want to come in here.
Yeah, I
know
think
that's a bit more of
well,
your.
to be honest with you, if I was doing the exam, this is the one I would sort of probably go into. I just like this because all you're literally doing is putting in 0, 1, 2, 0, 1, 2, 3 or whatever it is. And you will be given the percentages. So look, we do recognize that you've only 20 minutes to do this, so you're not going to have to do a whole pile of sums. So we will give you the percentages, and you just have a look through them and line by line say 0 for the best, 1 for the middle, 2 for the worst. And as Angelina told you already, the things you like, the higher the number, the better. Things you don't like, the lower the number, the better. So once you get that, and then the other thing is, and I used to use this model. I don't know. You see, over the years, I forget, which bits I made up myself and which bits I robbed from other people. I think this is a table I think I made up back in the day. And I used to use this quite a lot. So if you have 3 distributors, you can take the data from 3 distributors, and by doing those 10 sums, you can produce your own scoring models for each of them. So if I have 3 customers that I've been dealing with at a certain level, pop the 3 sets of data in together, and I know that's the highest risk, that's the lowest risk, that's the middle one. And in terms of the 16, 10, and 4, the total, like those numbers themselves mean nothing of themselves. How we decide is, so whatever the highest number is, that becomes your definition of high risk. So in one area it might be 14, in one it might be 7, so it's not a definitive number, which can confuse some people sometimes. So you just literally slot in the numbers and decide who is your high risk. So you're 16 high risk because that's the highest of the 3. 4 is low risk because that's the lowest of the 3, and then your medium risk is somewhere in the middle. Yeah. So those numbers will change depending on the data sets you're using. And if you want to compare 3 companies in France, so you take your 3 French customers, and now I know that's my lowest risk, that's my medium, that's my high risk. And then you can make, so if the salespeople were looking for guidance of which of these 3 companies should we concentrate on growing sales with, from your point of view as a credit professional, you would prefer them to be growing sales with the lowest risk customer, which is, with business. And by using this little model, this 0, 1, 2 model, that will give you as much information as you'd pay Dun & Bradstreet hundreds for. Yeah, and you're looking at real life information of real life customers. And from an exam perspective, it's literally just typing in 0, 1, 2 and then adding them up. To me, that should be an easy 20 marks. But then it's easy when you know it. And I have the answers in front of me. Okay, that's great, thanks.
So I think other than that, guys, like they would be the 3 questions that I would go for. As I said, Dec, you mentioned about the multiple choice questions, but I know they tend to be quite tricky. And they tend to be the type of questions that are in the short tests as well. Am I right in that?
They'd be harder than anything I
Yeah,
think short tests,
yeah. So, okay. So are you happy enough with that, guys? You
Yeah.
feeling more confident?
little,
Michelle,
yeah.
you're not 100% sure.
No, I might go study again. Yeah.
Yeah, in terms of study, and Angelina, I don't know, have you sent out the trial?
That's what I was saying. I was sure that I did, but I'll check. But absolutely, I'll get them out to you now
I
after
see
the
when you
session
do things
along.
over and over again, you expect.
Yeah, the 3 samples, yeah.
Yeah, we have examples. So there's 3 sample trial balances.
Yeah.
So you have a file with 3 sample trial balances in it.
Yeah.
One on each
Yeah,
tab
we
on the
got them, yeah.
bottom.
You
So
did get
just
them.
to give you
Yeah,
something
yeah.
to practice with.
Yeah, I did send them. That's what I was
And then I
thinking.
think, and again, I don't know whether this is a secret I've kept from you, Angelina. I also have 3 more.
Yeah. Okay.
Did I ever send them to you?
I'm not sure. God, yeah, I'll double check that. Yeah, thanks.
Yeah,
Emails
so
flying around everywhere.
there are 6 in total. So there's 3 sample trial balances, and then the file is called 3 more sample trial balances. So just and maybe over the week, if you want to, so maybe yeah, well we can check and see. I
Yeah,
can.
absolutely. Like I'll have a look and I'll certainly send them on to you. No problem.
Yeah. Well, look, I'll send them to you after this session anyway, just to be sure, to be sure.
And then you'll have
Um,
this one from the risk exam as well. That's another one to practice. And I'll email you the solutions, obviously, just when I'm finished
You're going
now.
to email the
Yeah,
mock paper
exactly what I have
solutions.
there. Yeah.
Yeah. So and if when you get the mock paper solutions, just be aware that where we have numbers in the solutions, they are not in fact numbers. They are formulas. Is that okay? So if you say, where on earth did they get that number for net profit? If you go into the net profit figure, it'll say it's that plus that minus that. Do you know what I mean? So if you do an F2 on the so if you, let me see, where do we go? Yeah, well, even so just click in on one number there, the net profit before tax. Yeah, there it is. So you can see up there that is an actual formula, which is showing which 2 cells we added together to get that number. Is that okay?
Yeah.
So hopefully that'll give you a bit of insight if you're stuck. And also if you're stuck, Angelina is there as well. So it's best if you work it out for yourself, because then you remember, rather than staying awake at night and stressing out over it. Angelina's available, and I'm around all week next week as well. So if you do have any questions, the last thing we want you to do is panic. And if something makes sense to you, well and good. If it doesn't, have a go, and if it still doesn't, just ask. And there is a
Yeah.
simple explanation, and hopefully we will simplify it for you. Is that okay? And if we get the samples and you practice them, so all that will be different in the exam is they'll just be different numbers. The
Different
layout,
figures, yeah.
structure, everything will be exactly the same.
Yeah. Okay.
Okay.
So I think
Thank
that's
you.
it, guys. That's our session, the credit risk finished. If you're happy, I don't know if I'll stop sharing my screen now. Sorry. Will I stop recording just for the moment, Deck?
Go on then.
Okay. Or did I didn't actually hit record, did I?
Yeah, you did. Or maybe I did. Hold on now.
Sorry.